Hi everybody. Today is week 6, and then this lecture is for Monday 2 p.m. Actually, this subtopic is supposed to be in topic 4, but I forgot to cover this when I did lecture for topic 4. I have covered half of the topic 4, which is related to revenue and expenses recognition, but this subtopic I forgot to cover, so I will do it this time. Okay, so this subtopic is related to revenue and expenses recognition. In the subtopic for revenue and expenses recognition, we have learned mainly about when is the time to record revenue and expenses. So in summary, in accounting, you record revenue when the transaction happen, not when you receive cash from customer. Also, you record expenses when the expenses happen, not when you pay the expenses. You can check the lecture video if you want to refresh your memory about this revenue and expenses recognition. So this is subtopic about concept of gross margin and income and net income or net profit. Okay, let's see. So in bahasa, gross margin means untung kasar, and net income or net profit in BM we call it untung bersih. Okay, so see the first point there. Three categories of business organizations. So there are manufacturing businesses, merchandising businesses, and service businesses. So this is important. If you go out there, if you go to any town, you will see many businesses. These businesses can be categorized into several categories. One of the categories that we can use is using these three categories. Businesses out there can be categorized as manufacturing businesses, merchandising businesses, and service businesses. So manufacturing businesses. So a simple definition for manufacturing businesses is businesses that purchase raw material, process the raw material, and sell finished product. So most of the time, manufacturing businesses are factories. If you see a factory, you will see that the basic operation of a factory is like this. The factory will purchase raw material and then process the raw material and then sell finished product. For example, in near to UPM, we have a Barrels Chocolate Factory. So Barrels Chocolate Factory, the basic operation is like this. The factory will purchase raw material, maybe raw chocolate, and then the factory will process the raw chocolate and sell finished product or sell chocolate ready to eat to customers. So if you see this kind of business, you know that this business is a manufacturing business. Okay, the second type of businesses that you can see out there is called merchandising business. The simple definition for a merchandising business is like this. A merchandising business is a business that purchase finished product and sell the same product to customers. The simple example for or the easiest example for a merchandising business is a grocery shop. a grocery shop purchase rice, sugar, many more, flour, breads, and from the supplier, and sell the same thing to customers, to us. So a grocery shop is an example of a merchandising business. Another example is supermarket. They purchase raw material, they purchase finished product and sell the same thing to us customers. Hardware, a hardware shop. So this kind of businesses, they are called merchandising businesses. The third category of business organization is called service business. A service business is a business that does not sell anything but provide services. An easy example is a laundry shop. If you see a laundry shop, the basic operation of a laundry shop is the business does not sell anything, but the business provide laundry services. You go to a laundry shop, the laundry shop will provide laundry services for you. The laundry shop does not sell anything. But one thing that you have to aware is the laundry shop does not sell anything. But when the laundry shop provide the laundry service, the shop will use supplies like detergents, softeners, etc. But the shop does not sell you the detergent of softeners. The laundry shop provide services to you. Another example is a clinic. A clinic also a service business. You see a doctor, the main thing that the clinic offers is medical service. And then like another one is like a restaurant. You see a restaurant, you go to a restaurant, you will get service. When we look at a restaurant, even though the restaurant sells rice or other meals and drinks, but the main thing about a restaurant is it provide a service to customers. You sit there, they provide you with service. Okay, so remember that a business that does not sell anything but provide services, we call them service business. Okay, so this is very important. You have to aware that manufacturing businesses and merchandising businesses, they sell products. Service businesses, in accounting, we see them as businesses that does not sell product but provide services. So the concept of gross margin and net profit, sometimes we call it gross profit and net profit, applies to businesses that sells product only. When a business sells product, the business has cost to acquire or to get the product, or cost to manufacture the product. So if a business is a manufacturing business, the business has manufacturing cost to manufacture the product that they sell. And if a business is a merchandising business has a cost to acquire or to purchase the product from supplier. But a service business does not have cost. A service business if you want to calculate profit for a service business, the basic calculation is revenue minus expenses, because a service business does not sell or produce anything, but it provides services only. So to calculate profit, revenue minus expenses. But for manufacturing business and merchandising business, they have cost to manufacture product or cost to acquire or to get product. So to calculate the net profit for manufacturing and merchandising business, the basic formula is revenue, which is coming from sales, minus cost. You will get gross profit or gross margin, and then minus expenses, you will get net profit or net income. Okay, let's see the next point. The gross margin and net income concepts typically applicable for manufacturing and merchandising organizations, because there is cost of goods sold in their income statement. This is the point that I have mentioned. It says that the gross margin and net income concept, or in a simpler word, the gross profit and net profit concepts typically applicable for manufacturing and merchandising businesses only, because they have costs. A service business in accounting, they do not have costs. They do not have cost to get inventories or to manufacture inventories. No. Okay, so this is the concept of gross margin and net income, or concept of gross profit and net profit. You will use this knowledge, the knowledge about this concept, when you prepare income statement for manufacturing business, for merchandising business, and for service business later. Okay, let's see. The basic equation or relevant equation for this concept. See the first green box here in this slide. Gross margin or gross profit equal to net sales minus cost of goods sold. So later, when somebody asks you how to calculate gross margin or gross profit for a business, then the answer is net sales minus cost of goods sold. Cost of goods sold is cost that a business has to pay to get inventories or stock, or to manufacture inventories or stock. Okay, let's see. What is net sales? This equation applies to manufacturing and merchandising businesses. Okay, see net sales. See the second green box there. Net sales equal to sales minus sales return minus sales discount. Okay, so remember this, net sales equal to sales. So in accounting, if a manufacturing business or a merchandising business sells something, that is revenue for the businesses, and we record this revenue in an account called sales account. So let's say you have a grocery shop. Every time you sell something, in accounting you have to record the sales in an account called sales account. Okay, so net sales equal to sales minus sales return. Okay, sales return is something like this. If you have a grocery shop, sometime a customer purchase something, or a customer purchase something, and then after a while, maybe one day, maybe several hours later, the customer return that item. Maybe he is not happy with the size of the item. Maybe he found that he purchased a wrong item, or maybe the item is already expired. So he or she will return the item. So in accounting, when a customer return an item to a business, we record the return in an account called sales return. So you can see here sales minus sales return. So sales return will reduce the amount of sales. So let's say today you have a grocery shop. Today you make 600 ringgit sales. And then in the evening, one customer come and return an item. The item is $20 item. So your net sales for that day is $600 minus the return $20. So $580. That is the net. And also, when you want to calculate net sales, you have to minus sales discount. Sales discount is something like this. You have a grocery shop, and one day your regular customer come, he makes a big purchase. Let's say he purchased several things, and the total purchase is $150. So you are happy, you know this person as a regular customer, you give this customer $15 discount. So that will decrease the total sales for your business on that day. So in accounting, when you give a discount to a customer, you have to record in an account called sales discount. Okay, so net sales equal to sales minus sales return minus sales discount. When you want to calculate gross margin, remember the equation is net sales minus cost of goods sold. So net sales, how to calculate net sales? This is the formula. And then the second thing in the calculation of gross profit or gross margin is you have to minus cost of goods sold. So cost of goods sold, like I said earlier, cost of goods sold is cost that a business has to pay when the business manufactures product, or when the business purchase product or inventories from suppliers. So at this point, you have to just see this formula and maybe memorize this formula. You will use this formula when you have to prepare income statement for manufacturing business and merchandising business later. When in the later chapter, I will explain again, and I will show you how to prepare the income statement, and I will explain again how this equation is the logic of this equation. So remember, at this point, the cost of goods sold or cost to manufacture a product or cost to purchase inventories equal to beginning stock or beginning inventories plus net purchases minus ending inventories or ending stock. So we make a simple example. Let's say you have a grocery shop. So how to calculate cost of goods sold for your grocery shop? The calculation is beginning inventories in your grocery shop plus purchases that you make from suppliers. If you have a grocery shop, you will purchase rice, sugar, etc. from suppliers. So beginning stock plus net purchases minus ending stock at the end of accounting period. So the calculation of net purchases is also there's a basic there is a calculation for net purchases. You see, net sales, there is a calculation for that. Net purchases also, there is a calculation for that. Net purchases, see the last point here in this slide. Net purchases is calculated as purchases. So purchases is an account where you record all business purchases from suppliers. Let's say you have a grocery shop, you have many suppliers to that offer or sell rice, suppliers for sugar, suppliers for bread, other things. So net purchases is calculated as purchases plus freight in and duty import minus purchase discount and return. You will see that later. So net income. So how to calculate net income? Net income or net profit, the calculation is like this. You have to add one more item. So net income equal to net sales minus cost of goods sold minus expenses. Or net income equal to gross margin or gross profit minus expenses. Okay, so how to make it simpler? So the calculation is like this. The thing that you are learning now is the concept of gross profit and net profit. Okay, so what is gross profit? Gross profit equal to net sales minus cost of goods sold. And then what is net profit? Net profit equal to gross profit minus expenses. Okay, now what is expenses? You have learned about the expenses in the beginning of this topic. Expenses, the simple definition is expenses are things that a business has to pay to continue its operation. For example, utilities, salaries for the workers, rental. Okay, and then see here, one point in this slide, expenses can be categorized into selling expenses and admin expenses. There are many expenses that a business has to pay. Like I said earlier, utilities, salaries, rental, tax, what else? Licenses, transportation sometimes. So these expenses can be categorized into selling expenses and admin expenses. So there are many expenses. These expenses can be categorized into selling expenses and admin expenses. So what are selling expenses? Selling expenses are expenses related to getting orders from customers and selling goods to customers. Any expenses that is related to taking order from customers and selling things or goods to customers, they are called selling expenses. For example, advertising expense is a selling expenses. What else? Salesperson salary is a selling expense. Anything related to getting orders from customer or sells things to customer, they are called selling expenses. And other than that, expenses other than selling expenses are called admin expenses. For example, salary for human resource officer, that is an admin expense. Depreciation for personal computers, that is an admin expense. So there are many more. If you see a list of accounts, you have to know which account is which account are selling expenses, which account are admin expenses. So see here the last point in this slide. Refer textbook page 198 to 201 for application of this concept in companies income statement. So this is not your textbook. This is another textbook that I used in the previous semester, so don't have to worry about the last point in this slide. Okay, that is it. This is the thing that I want to share in this video. Do not forget to write your name and matric number in the comment section. I will take that as your lecture attendance for today. Thank you.